You are welcome to E-marketTubeFX, and you are with your trader Henry Ampim taking you through this journey. If you join us via Google Meet and this webinar, once again you are welcome. If you also join us via YouTube, you are also welcome. And remember, do not forget to subscribe, like, and share. As you continue to do that for me, anytime I make new video on Forex or any other content, you will be the first person to watch. Then as you continue to share with loved ones, they will also have the opportunity to learn what you are learning. So, for us to begin with what we have for you guys today, we are going to look at how to read the candlestick chart. So just as I've been doing with you guys, I've been combining the P language and that of the English language to help you guys to understand whatever I'm teaching here. And to me, I don't got a very important and also for my Henry and every minimum share more. Yes, I have a share here how to read candlestick chart. And so we'll share a screen so we're going to say, yeah, candles do on more. A big color red, and a big color green. And then about a share, quite a password, you put in your eye. Every day, I chat and only who be a higher price of call. Now, you also get pretty market now, you know, a password there into your own and then about a share. So, right, as you heard me in P, all I'm saying is that today we are going to look at how we are going to read the candlestick chart. So that at any given point in time you want to trade, you have better understanding as to how this or what these candlesticks are, so that you trade with informed decision. Yes, you trade making informed decision as to whether you are going for a buy or sell, having a better understanding of the candlestick. So that is what we are going to look at. And let me also add that before you can read the candlestick chart, there are certain things you should know. Yes, there are certain things you should know. That is what we are going to look at. First, you should be able to tell what candlestick actually is. So when we talk about candlestick, what are they? Candlesticks, what are they? You should know. Then, as a trader, you should know the types of candlesticks that we have. So over here, as you can see, over here, we have a bunch of candlesticks moving in this direction, and others to moving in this direction. And the various types of candlesticks that I'm talking about all come together to form this pattern that you can see on your screen. So we are going to look at the various types of candlesticks and what they represent. Then, in our next lesson, we'll be looking at candlestick pattern. Yes, these candlesticks, when they come together, they form a pattern. So when they form that pattern, what does it mean? What are you supposed to do as a trader as when those patterns unveils itself on the chart? So we'll also be looking at that one also. So that as when you are doing your technical analysis as a trader, you do it effectively and earn money from the market. So that is what I'll be helping you guys to know in today, and that's all the next lesson that I'll be having with you guys in this webinar. So continue to stick and stay with us till we are done with this webinar. Remember, this is E-marketTubeFX, and this is your guy, your trader, Henry Ampim. But before we move on to the meaning and that of the types of candlesticks, because we're dealing with a candlestick, I want to throw more light, checking something before we move on to the meaning of the candlestick and that of the types. When we talk about the candlestick, I've already done a video on the time frame. I just want to say something small about the time frame, then we'll move on to the meaning. I've already done a video on the time frame, but let me chip in this small, then we'll move on to the meaning and that of the types. The candlesticks that you see here, they are formed based on what? The time frame. If I say time frame, over here, you can see MN. The MN stands for monthly. So with a monthly, what it means is that this candlestick that you see here, the individual candlestick that you see here, use a whole month to form one candlestick. Then when we move to the W1, the W1 here means week. So what it means is that the individual candlestick could be at the 1 week and at the 4 year. That is the meaning. So with the weekly time frame, the individual candlesticks that you see here use a whole week, so from Monday to Friday, to form just one candlestick. One candlestick. Then when we come to D1, the D1 here represents daily. So with the daily time frame, what it means is that the individual candlestick that you see here use a whole day to form. Then when we come to that of H4, the H4 also here represents what we call 4-hour time frame. So a 4-hour time frame, what it means is that the individual candlestick that we have here use a whole 4 hours. Use 4 hours. 1, 2, 3, 4 to form just one candle. So just one candle will use 4 hours to form. The other candle said, you share a candlestick here. You will be a better time frame. Time frame piano. And then one candle ahead. Forming to be a long candle will be sitting on one. It is just a time frame. And as a candle and form it into your monthly. And your monthly and your weekly. Monthly is just a month in a whole so about hope. And this a form a candle could be a while. Indeed, you buy a weekly sure. Meaning say 1 week. Monday to Friday and a day at the 4 year. Saturday about a year D1 a day so I mean say 1 day and a day at the 4 year. H4 also is 4 hours in that order. It means 4 hours. Candle could be at the 4 hours in the 4 year. When we come to that of H1, the H1 means 1 hour. What it means is that the individual candlesticks that you see here use 1 hour to form. Either big or small. Take note. Either big or small. They all use an hour to form. So after an hour, then another candlestick will also form. In that order. Then when we come to M30, the M30 means that in that time frame, the individual candlesticks that you see here use 30 minutes to form. In the M30, also just a individual candlesticks in our own way. So the at the 30 minutes and the 4 minutes. After 30 minutes, the next candle is better for me. That if you are about M15, so I just a year 15 minutes and an individual candlestick and 4 minutes. So what it means is that under M15 time frame, the individual candlesticks use 15 minutes to form. So after the 15 minutes, another candle will also form. That is what I want you to get, because we'll be diving more into the candlesticks, the meaning and the types. So if you understand this thing, that is why I'm keeping this in before we move on to the meaning. Then when we come to that of M5, the M5 time frame means that the individual candlesticks that you see here use just 5 minutes to form. So after 5 minutes, another candle will form. After 5 minutes, another candle will form. Then when we come to M1, M1 means that the individual candlestick in the M1 time frame, M1 is meaning 1 minute. So the M1 or the 1 minute time frame, it means the individual candlestick that you see on the chart use a minute to form. So after a minute, another candle will form. So all the individual candlesticks that you see here, after a minute, this candle form. After 1 minute, this candle also form in that order up to this one. So I've already told you that I've done a video coverage on that of the time frame. So do well and watch that video so that you have better understanding when it comes to the time frame. So quickly, let's look at what I have with you guys with regard to how to read the candlestick chart. As I informed you already, we'll be diving more into the meaning, what actually candlesticks are. Then we'll also be looking at the types of candlesticks today. The types of candlesticks that we have, we'll be looking at the types. Then in our next lesson, we'll also be looking at the candlestick pattern. So continue to stay with E-marketTubeFX. Let's quickly look at the meaning of the candlestick as I earlier mentioned. So I told you that for you to analyze or for you to understand or read the candlestick chart, there are three things you need to get. First thing is you need to understand what a candlestick actually means, and that's what we are going to do. So let's quickly look at the meaning, then we'll move on to the types. Now, when we talk about the candlestick, a candlestick is a charting tool used in technical analysis that shows the opening, closing, high, and low price of an asset within a particular time frame. All that I'm telling you is that this candlestick that we are talking about, we use it mostly for technical analysis. So over here, what I was doing, the resistance, the support that I use, all these lines that you see here are for technical analysis. Just taking notice of where price is reversing, then where price is likely to move to, and when it's reversed at certain key level. So these are the technical analysis that I was doing, and I'm price action trader. I used purely the candlesticks to do my technical analysis to decide. I don't use indicators to decide where price is moving to. I use purely what we call price action for my technical analysis or as a strategy to trade the market. That is what I mostly do. When I started trading as a beginner, where I was using indicators, I don't want to mention any indicators name. I was using indicators to do my analysis, but when I got deeper understanding on the market, right now I just trade naked with my trade lines and other things, add my ICT, then I'm good to go. So that is basically that. So we use it for our technical analysis. Then it shows the opening. So over here, when you check what we have here, this is the opening price. It shows the close. So this is the close side of this candle. Then the high price. This is the high price of this candle, and this is the low price of this candle. So this is basically what the candlestick represents. So we use that for our technical analysis. So that is it. Now, so as I earlier mentioned, with a particular time frame, as I earlier mentioned, I told you that when we move to each time frame and the candlestick form over there. So one candlestick form in 1 hour time frame, meaning that candlestick use 1 hour to form. Then when you move to another time frame to the candlestick that you see there, that if it is 30 minutes, it means that individual candlesticks you see there use 30 minutes to form. Now let's look here. Candlesticks formed on the chart are language every good trader understands as they form. So as I earlier mentioned, the candlesticks that you see on the chart are language that we traders understand as they form. So as and when they are formed, we understand. So when price got here, as I earlier told you, there is a rejection. I know because price was not able to break through this resistance, there is a rejection, and possibility of price coming down is very high. And look at what happened. So if I enter the market right after here, after this candle form, price moving down out to this side is profit for me. Yes, so it's a language. In fact, candlesticks are like a Bible to us traders. So we traders, the candlestick is like a Bible to us. We take it, we read, we analyze, we use it for our technical analysis. We make money from the market. They represent the behavior of market participants, big banks, hedge funds, and retail traders. Yes, that is what the candlesticks represent. It represents, aside it being a language, aside it being a Bible to we traders. Me say candlesticks no. Say if you are a kasa traders. If you are a Bible traders kind of. Candlesticks sign it in all as what? It represents the behavior in all the traders in the trading market. You soon are buying our market one and the other candlestick they are representing. This is very interesting. Yes. It represents we traders our behavior. So the big banks, how they create for a particular currency, either for a buy bias or a sell bias. The candlesticks are used to represent that. So if you see a candle moving or forming in a particular direction or at the key level, it should tell you that at this level, price or market is about to sell. Or at this key level that this candlestick has formed, market is about or price is about to move in the buy direction. So that is how it is. So note first, the candlestick represents or it's a language that we traders understand. The second point is the candlestick happens to be Bible to we traders. Then also the third one, it represents the behavior of we traders on the market, the big banks, the hedge funds, and that of the retail traders. I've already explained all these technologies in our previous lesson, so you should understand. This means you can't trade successfully without understanding the three key things candlestick represents on the chart. So if you want to trade successfully and you don't understand this key things that I made mention of, then how can you trade the market and make profit? No wonder some of you enter the market and blow accounts. You gamble because you don't understand the meaning of the candlestick formed on the chart. So over here, like this point, the candle is moving for a buy. And because you are blind, you don't know anything about the candle, you may think that the candle, the price will continue in its bullish form. But I know, because I understand that I know price is about to reverse due to the key level. But when we extend the trend line, here price reverse, so the possibility of price reversing here to reverse. And there's a long wait. We'll look at that when we get to the tax. And I was able to cash in over there. So that is how it is. It's important for you to get this explanation. Now, having solid knowledge about the candlestick pattern helps you to make informed decisions as a trader. For example, knowing whether to buy or sell a currency, especially when price reaches key levels in the market. This area is very, very important. I just did an example with you. If you have knowledge about this candlestick, as and when they are formed at key level, you take appropriate decision about where price likely move to. Then you cash in there, you go home. So you take note. Now, let's look at the candlestick itself. We are quickly going to look at the various parts. Then, what actually led to the formation of this candlestick, we'll look at it. The American now said, you see, I share a meaning of candlestick. I don't say, it's in all my I went to the CSI. If you see in all my Bible, I went to the CSI. If you see in all Roma, and you traders, I trade the market in you shoot any buying or market war. If you go ordinary marketer, you see traders or buyers craving for a particular product. Your company I don't want to answer. So on the chart, if you just represent, you see they use a particular candlestick to represent that demand for that particular product. How traders or how buyers are craving or buying that product. We'll dive more into that. So that is how the candlesticks are formed. So you take note. So quickly, when we come to this side, we have the parts. So as you can see, this is the bull candle. The green candle happens to be the bull or bullish candle. The red candle you see at the right side also happens to be a bearish candle. Now, let's quickly look at the parts. This side happens to be the high price. This is the high price and this is the low price. High price because price moved from the low to the high. Thank you. Now over here, we can see that this is the opening price. This is where price opened. This is where price opened. So this is the opening price. Then it closed at this point. But before it closed here, it got to this point before finally closing at this point. Then this is the body of the candlestick. So these are the wick. You call it shadow or upper shadow or other upper wick. Then here happens to be the lower shadow or lower wick. So you take note. And this is the body. Then when we come here, this is also a bearish candle. And this bearish candle that we are looking at, this happens to be the very point price opened. Then it came down to this point, then came back to this point, then price closed here. I will explain to you why price moved all the way to this point, then finally closed here. I will explain everything to you, so you stick and stay with me. Remember, this is E-marketTubeFX, and you are with your trader, Henry Ampemdakon. Do not forget, if you are watching me on YouTube, kindly subscribe, like, and share. So as I continue to do content like this, you will be the first person to watch. And those that you are sharing this content with will also have the privilege to watch my videos. Then together we will equip ourselves with the needed knowledge and skill to trade the financial market. Yes, it is possible that you too can trade the market. Just get the right knowledge, get the right mindset, then you are good to go. And that's what I'm doing with you at this very moment. It's the American and said, if you are what me, so you are training or who meet, yes, I meet, yes, I will name. The American and said, Member, we subscribe. Boom. We are not like it. Boom. We are not saying wash it. It you so, yes, I know. A baby, I made you would not be the kind of shit. And yet, one more watching now, so. A baby, I don't know what channel. The issue so much is adding now. Yahweh, is surely the financial market. I could treat it. They just cash here. They are boy, bra. They join it to Juma 45 minutes. Yeah, into me that. And into me that time. And my Gusia, now into me review. I did China now near way tomorrow. We just said the financial market. I bet you press to breathe. With no machine, no, I would treat the apples get Google to come. So that is what the financial market actually represents. Now, let's dive more into the candlestick that we move. Over here, I'm now about to explain what actually led the formation of this candlestick. This candle that you see here. Now, when this candlestick, as I mentioned, price opened here. At this point, price open here. Then when price open, you know what happened? Sellers attempted to push the market down. So they pushed market to the low price at this point. Then the buyer said no. We are not going to allow these sellers to push the market down. And note, on the Forex market, at the very moment you are buying a particular currency, another person or another trader is also selling. On the market, we do two things. Either you buy a currency pair or you sell. So that's how it is. So at any given point in time that you are thinking of buying, another trader elsewhere is also pushing for a sell. So it's like a war, type of war on the market. So over here, sellers try to push market to the low, and buyers said no, we won't allow you guys to push the market to the low side. We won't allow you guys to sell the market. So buyers came in, pushed the market back to the point price open. Then it didn't end there. So that's the main reason why. Because buyers push the market to this point, that is why we have this wick here. So whenever you see a wick, it should tell you something. As a word for key levels on the market or on the chart. So buyers push the price back to this point. Then they didn't end there. They said you guys, you wait and see. You see what we are going to do to you guys. Then they push market up to this level, this high. Then the sellers also came in from, they said, no, we won't allow you guys to continue to push the market to the outside. We also show you our powers. Then they also started injecting their capital to sell the market. Then this is where price actually ended. So if we are doing this candle is formed in a 1 hour time frame, it means exactly an hour this price close here. This candlestick ended here. So price close here, which led to the formation of this candlestick. So sellers pushing them, trying to push the market down, led to the formation of this candlestick. So this is the point they ended. Then another candle also begins to form in the hour chart. So over here. So let's assume this happens to be an hour chart. Another candle is forming here. So the very point price close with regard to the bullish candle, the full candle, no, price close here, no. That same point is where the bearish move also starts. So at this point, price open here. And guess what? You do have more. Buyers came in strong, bought the market to the high level. Then the seller said, no, you guys, look at what we did here. You want to still continue to buy this market, push the market to the top? No. So sellers came in very strong, pushed market back to the point where price opened. They didn't end there. They continue to show their strength on the market by injecting their capital, selling the market up to this low. Selling the market up to this low. It is the American answer. A year better, no, ever price you can't six and say for me. As I know, in the year that a year buyers on the market, a pushing market up, a pushing price up. And I tell you, today, yeah, more a year. Buyers in the and pushing price in the end also. It's yes, yeah, and all a shall so we inject your capital, we push you sicker at the share marketing. Buy selling the market. If you don't sell, then they will power the sellers. So they brought price over the price in the point now, a P. And so why we sell the market, sell the market now to this low. Then one price got here. So over here, because sellers push or rejected their capital in attempt of selling the market, which led to the formation up to this point, led to the formation. Only thing that you need to week here, intimate share a week here now. Yes, it's almost sell the market now to this point, It's almost sell the market now to do you guys are pushing the market down too much. We have to come in. So they also buyers also started rejecting their capital. Buy the market. Because I've already told you that at a given point in time that you are buying a particular currency pair, another trader elsewhere is also selling. So as sellers trying to push the market down, buyers also came in, injected their capital, but it was not enough. In another time, the candlestick ended here, price rose here, and this led to the formation of this candlestick. So, having this background knowledge, when you are trading on the market and you see a body of a candlestick form like this, should tell you, the trader, that the bullish move is very strong. Look at the body. The body speaks volume. And you being a trader need to understand. They are making an answer. As a trader, some of the people trading market in the area of candlesticks in the air formula, be it monthly time frame, weekly time frame, daily time frame, any lower time frame was in the airport. After when I price, I have candlesticks in the airport. But in the Katana, I form the air can be at your day. Buy at the whole market in the door. If you also a young week, a year shadow now, a one also air can be at the there is or there was a rejection. Now I think that the market in the corner, I said to say if you push it by, would that want that? The body of the candlestick should tell you something that sellers on the market are very strong. So the body of the candlestick should tell you something as a trader tell you something as a trader. Quickly, let's look at the type of candlestick that we have. So now we are done with the part of we go through the various parts of the candlestick formation. We are now moving on to the type of candlesticks that we have. So over here, you can see hammer, we have inverted hammer, we have dragonfly doji. Over here, we have hanging man, we have shooting star, then graving stone doji. We look at what actually led the formation of this candlestick. And then anything the community is shooting all day and the traders enter the day of market one mutia. And man, that candlestick will form here. Remember, you are with E-marketTubeFX and you are with your trader Henry and trying to break this thing down on a different level for you to get this concept. Yes, on a very high level, trying to break this thing down for you to get it. It's simple. When you move to other platforms, many people are trying to teach this in a different way, but I'm also using special means to teach you this. Because personally, I don't see any difference with regard to the traditional market, what actually happens in the traditional market to that of what happens in the forex market. We are all traders. We are all traders. So I'm using that background knowledge to try to explain the forex market to you. Yes. Now, let's come to the hammer. What led to the formation of this hammer? Let's look at something here. This is a bull candle. So the bull candle, this is where price opened. So over here, price opened at this point. And let's look at what happened. When price opened, sellers came in very strong. They came in strong. Price be now. And I said, all price current person. A pushy market, a pushy price down about this low. So sellers push price to this low. Then the buyer said, no way. We won't sit down to let these guys continue to sell the market. No, we are also in for money. We are going to buy this currency pair in a different level. So regardless of sellers buying or selling the market to this level, buyers came in, injected their counter, then they begin to change the narratives. Into the share we are buyers need to be very strong. As to a year currency pair out to into salary one no more to go. You look at my pointer. Also, back to this point, the very point where price opened. Buyers should be able to identify you. So it should tell you the strength of buyers in the market. So when this candlestick is formed at key level, don't go for it. When this candlestick is formed at key level, ask any trader. I'm trying to break things down for you to understand what led the formation of this candlestick. So buyers push price back to this opening price. Then it didn't end there. Move beyond, push price beyond. Then finally it closed at this point. So you see, so when this candlestick is formed at key level, you go through the pattern and you know what I'm talking about. And I also show you where that. And you see the influence of this candlestick as it went formed at key level. Now, the other thing I said, so we trade and I will trade. Now who said, that candlestick, I have been hammered up for me. The one who I have for me, they say, that candlestick, every time I have for me, I have a price be here. I have a shot here. Price be here now, market be here now, sell it to a shot somewhere there, almost sell it a year market. It almost sell it, sell it currency pair now to this point. And I buy it to know. Yeah, Tom. Yeah, right. Yeah, mama, I want to. Now Now, also, and tone currency pair. It's as if you buy a physical. So you are also going to buy the market. You are going to buy the currency pair. In a strong move, in your own shot somewhere, injecting almost do currency pair. In a strong way, if you move to now price in air the movie, and the other two be beer or putting carrier price be a candlestick, a sharp say a woman. Price in a bar as I do have to see. It's a price be to have or one so one, and of course you take on capital and a movie beyond. It's a hard to close here. And so we trade and now trading our Forex market. Now says that candlestick are forming as key levels, as resistance, what we call it, as support, as a trend line. Can be shell as a trader. Who are they? What are the analysis? Who are they? Fundamental analysis. Now, maybe I will do near the edge. Now let's look at what led the formation of this candlestick. Yes. Over here, as you already know, let's quickly refer. As you already know, this is where price open for boom. So when you come here, when you come to this side, this is where price opened. So when price open, look at something here. Very interesting. When price open at this point, no wick. So if there's a wick, you see a rejection, like what we see here. Sellers pushing the market down, then later buyers came in to push the market back to the entry or opening price, then move beyond. Over here, no sellers. If price open, boom, went to the top. No wick, no sellers at this point. So buyers push market up to the high. Then sellers said, no, these guys, how come you push price to this level? No, we also have to come in. So sellers also started selling the market or that currency pair. Then, as they started selling in a strong way or in a strong move, look at what happened. They pushed price down. So the wick that you see here is as a result of the rejection, the selling power, the sell bias. So over here, sellers were removed, sold, were selling the market up to this point. So when they got to this point, this is where price closed. So they started selling at this point. Buyers, they bought the market up to this price. Then sellers came in, selling very strong. Then price closed here. So you see, very, very important. And this candlestick too. When you are trading this candlestick, and you see this candlestick forming at key level, look at it. Look, no wick over here. What price started buying? No wick. It should tell you as a trader, it should tell you something. When this price is formed at key level. Let me show you an example. From a real chart over here. The chart. This is the chart I use for my analysis. So this is where I normally use to do my analysis. Yes, I'm more used to the MetaTrader. Now look here. Look at this candle. That inverted hammer is what you can see we have here. Let me zoom for you to see. So you see the trend line. You don't gamble on the market. Look here. Let me zoom. At key level, when this candlestick fall, even this one is has small wick at the bottom. Let me zoom. Yes. So after this bearish move, at this key level, there is a support here at this key level, and it also meet a trend line at this key level. Sellers pushing the market down. This is the candle that formed. So over here, buyers came in very strong, buying the market up to this price. Then sellers came in, trying to push the market down, just as they did over here. But price close, this is the 1 hour time frame, price close here. But let's look at what happened next. Look at this. And that is another strategy. When I'm trading and I see price forming at this key level, I don't joke with it, guys. Look at what happened. Look at the core move up to this level. Look at the next candlestick. Look at the body. So the body of that candlestick should tell you, the trader, how strong the buyers are in the market. So that is it. So you take note. Let's go back to our slides, then we'll continue what we are learning. So back to the dragonfly. So take note, the inverted hammer. Back to the dragonfly doji. So the dragonfly doji over here, as you can see, this one too. When price opened, boom! Sellers came in very strong, pushing the market down. Wow! Very interesting. Pushing market down, selling the market, selling that currency pair. Then the buyer said, wow, we will also show them our powers. So they also came in very strong, buying the market, buying that currency pair, moving from this price up to the very point price opened. So you see, they move it back to the very point price opened. So, and they didn't stop there. They move it beyond and price close here. So if this happens to be an hour time frame, meaning after an hour, this is where price closed. So this is the dragonfly doji. So you should take note of. Now let's come to the hanging man. So the hanging man too, this is how it is formed. So over here, just have to know the bearish move or the bearish candlestick. This is where price open and this is where price close. So over here, with this candlestick too, on the market, immediately price open, boom! The sellers were in full motion. The momentum was very strong. Almost on that currency pair, almost on here, at the end, they will do as you see. And the buyers and also DP. Yan now no more Emma Moon Cosway a day, and sell a market in the side. In the end, she had a market in them. Then the other day, that's the top that currency pair. So over here, as you can see, buyers came in very strong, move price from this point. Here, there's no wick. Immediately price open, boom, to the downside. Then buyers also came in very strong, bought the currency pair up to this level. So after an hour, this is where price closed. I hope you are with me. Remember, you are with E-marketTubeFX, and this is your guy Henry Ampimdaku, trying to help you guys to understand the forex market, especially in the area of the candlesticks at this very moment, so that with the understanding that we will get whenever as and when we get money to trade on the forex market, we trade with understanding, not gambling. We don't gamble. We don't gamble. We don't gamble. I just showed you a chart. We don't gamble on the market. Over here, I remember I told you why I entered the market, what I was waiting for, and when I had that confirmation, I entered the market, and this is the evidence. This is the evidence. We don't gamble on the market. We do our technical analysis, add the fundamentals, then we take decision on the market and make money. You can also do it. Just stick and stay with me. Remember to subscribe, like, and share. Thank you. Now let's move on. Over So we are now done with the hanging man. Let's come to that of the shooting star. With the shooting star too, just as you know, over here, with the bearish candle, it opens at the top, then closes at the bottom or down here. Let's look at something here. This is where price opened. As you can see, this is where price opened. So when price opened, what happened? Buyers came in very strong, pushed the market up to this point. Then the seller said, no. We won't continue to allow this guy continue to buy this currency pair. So we have to come in very strong and take control of the market. So sellers came in. And you picture that candlestick here, you do have price open here and a buy it pay to a currency pair to this point. And a more tone, a seller, let's see the young sellers are and also. And almost inject some capital and sell the market now up to this point. Na price here the PM or man kawa and nobody will do have to see into her and a price here a close here. It's a 1 hour time frame and a candlestick and a price close here. So this is a shooting star. And when you are trading and you see this shooting star forming with regard to the explanation given, buyers trying to buy this particular currency perhaps to this point, then sellers coming in very strong, selling the market to the point where it's open, then went below it should tell you something that sellers are very strong, and when this candlestick is formed at key level, hey, don't joke. These candlesticks, as I earlier mentioned, represent language. It's a language that we traders understand. It's a Bible that we traders read. And it also represents the behavior of traders. That behavior is what I'm elaborating here for you to get. The picture that I'm drawing. The American United said, so who sharing? The American United said, so we trade and now we trade here. Now who says our candlestick for me at key level? Be a man down. Be new. She had said that the candlestick in air for me at that key level now. Who bet you will say no? Market in the air reverse it. Because at the key level, there is a rejection. Why is the rejection? Buyers pushing market to this high. The sellers coming in strong, pushing the market to the very point price open. They're pushing it down. Wow. At key level, at resistance, don't sleep. Adding other technical analysis, you are good to go. Now let's come here. So this is the shooting star. We'll dive more to the pattern and you understand. We'll keep making reference to it. So let's move. And remember, you are with E-marketTubeFX. Do not forget to subscribe, like, and share. Yes, we are looking at how to read the candlestick chart. So now we are looking at the type. We've already looked at the meaning. We are now looking at the types of candlestick that we have. So take note. Over here, what we have here is graving stone doji. So the graving stone doji too is also a language. This candlestick also represents the behavior of we traders on the market. And now let's look at the behavior. Yes, you soon find I am not that kind of way for me. To say the name that a year very scandal, a BA also a price opens at the top here, then closes at the down here. So over here, where price opened, what happened? Buyers came in strong. Boom! They push price to the top. Price open and a buyer in the bill. Boom! Extra currency pair now to this high. And I sell it to the baby. No. This people, one more crime among us and buy that currency pair. No. And say we have to come in strong and sell this currency pair at this very moment. So sellers came in injecting their capital. So at this very moment, you see big banks injecting their capital. I've already told you, at any given point in time that you are thinking of pressing the button for a buy, another trader is also sitting somewhere pressing the button for a sell. The business survive. So we don't gamble. You have to do your technical analysis. Take note of the 4 points that the institutional traders are leaving on the chart. And let me remind you, on the market, on the Forex market, we retail traders, if you want to be profitable as a retail trader, make a retail trader, yeah, you see, getting a trade market, yeah, a retail trader. So, yeah, you see, $1 million or $1,000 Ghana, what we call $1,000, and no $100, $200, $500, and no $1 million, $2 million, and 50,000 US, it can't move the market too. This market was almost like 6 to 7 trillion a day. One trading day. That is the worth of that market. So that was your $1 million, your $2 million, and the rest. You can't move the market with this as a retail trader. So how can you remain profitable? You have to follow the institutional traders, the big banks. You have to follow them. And they will not tell you that we are buying or we are selling the market. They need a footprint. And the formation of that candlestick form should tell you how the big banks are selling that market. The body of the candlestick should tell you how sellers are selling that market or buyers are coming in. The big banks are buying that market for them. Add your technical analysis and see if at that key level, this is what has formed at this key level. Like over here, look at what happened. I'm not joking. Look. Price started to push up, reversing to the point. And this is a level, a trend line that price keep reversing as and when it hits. What happened? Look. There was a reversal here. Another reversal. Then a third reversal. This is not a joke. This is not gambling. So you need to have that eye to draw that trend line. Those key levels, you need to have that eye. And that's what we are looking at. Remember, you are with your trader, Henry Ampim Dapo, and this is E-marketTubeFX. We are doing this in a special way to help you guys to understand the Forex market. Now, let's take a look at. So we are done with the types over here. We are moving on to the other types. But one thing I want to draw your attention is that if you check the hammer or the inverted hammer, with that of the hammer, inverted hammer, the hanging man, the shooting star, with that of the dodgy, you see that there is a slight difference. The difference is that when you check the body here, where price opened and where price closed, the difference is not that wide. Difference in the that is susa. Where price opened and where price closed, the gap is very close. But when you check, I'm talking about this candlestick, the dragonfly dodgy, the dodgy, the two dodgy. When you check the hammer and that of the shooting star, normally when you check this one, you see where price open and where price close. You see that the gap seems to be a bit wider than that of the dodgy. So that is the only difference that you need to take note of. At any given point in time, all of them, you see a rejection, and this is the rejection that we are talking about. You see a rejection. This week it represents a rejection. Rejection of what? The sell move. Buyers coming in strong. Rejection of what? A sell move. Buyers coming in to buy at this point, but they weren't able to overpower the sell move or the sell momentum. The price close here. So whenever you see a long wick, it represents rejection. And that's what led me to win this trade. Yes, that's what led me to win this trade. Rejection at key level. Over here, it happened. I should have maybe extended this for you guys to see. When price got there was a rejection. Price returned back to that key level. another rejection. And looking at this, we are going to look at that candle. We are going to look at that candle next. Yes. So that candle, the doji, this doji that I was talking about, that is what you see here. That is what you see here. We are not joking, no. That is what you see here. So as a trader, when you are trading and you see these things, you should understand what the market is telling you. You should understand. And so what is your price? No, candlesticks now, apple, no, and can be so you will never be wasum, so you should try and understand these things. It's very, very, very important for you to understand. Very, very important. So kindly take note. So quickly, let's come back to the doji I was talking about. So just as I started with this one, I'll explain and I'll come to the spinning top. So with this candlestick formed, it represents indecision. Indecision in the sense that you see when price actually opened. Let me start from here. When price actually opened. When price actually opened here, sellers came in very strong. Pushed the market to the low side. Then buyers came in also very strong. Overpowered them. Then they pushed price back to where it opened. Wow. And almost the extra the price in PM and then OPM. You push market or the price beyond to this high. Then the seller said, no, you guys really come here to joke. We are going to sell this price. We are going to sell this market. So sellers also came in. They also came in. Then sold to this point or to this price. So over here is where price closed. Over here is where price closed. Over here is where price closed. So over here we call this candlestick indecision. Indecision in the sense that both buyers and sellers are in equilibrium. The selling power and the buying power is in equilibrium. No one is bigger than the other. The selling power and the buying power is the same thing. The selling power and the buying power is the same thing. Then when you come here, it's also the same. It represents indecision in the market. So whenever you are trading and you see this candlestick form at key level, it may be a buy of like here, over here. Let me use this instance for you to get what I'm talking about. Over here, price is in full motion buying. Then when it goes to this key level, you see what happens? Buyers push price to this key level. Initially, when price opens, it got to this point, this low. Buyers coming in, bringing it to this point, then came to this point, then sellers coming in, then push price back to where it's opened. So it means that their powers are in parallel. No one is bigger than the other. So if you are thinking of continuing by that particular currency pair at that key level, you should think twice. That there is a possible reversal because the buying momentum is down. Now the sellers are also in equilibrium. So that is what it represents. And that's what made me take that trade. So you see what I'm talking about. So you need to understand the individual candlesticks on the chart. That will help you to be efficient in your trading. So that is the decision. So one form at key level, it should tell you something as a trader. The same thing here. Indecision. And when you come here, this spinning top 2 has the same meaning, just that the body seems to be a bit bigger than that of the doji. The same meaning. When you check the weight, the height, the weight height, and here seems to be the same. So over here, price open, came down, sellers pushing market down, buyers came in, push market back to where it's open, then went all the way up, then sellers came in very strong, selling the market to this point, and this is where price closed. So the wick at both ends seems to be of the same height. So we term this as what? A spinning top. And it also tells we traders that there is indecision on the market. So sometimes you may see candles form at this like this at key level. You may also see it form like this at key level, be at resistance or be at support, be at the demand or supply zone. So these are some of the things that I want you guys to take note of. These are some of the things that I want you guys to take note of. So we are continuing the types of candlestick, and we'll move on to the pattern. Then you get to have a deeper understanding of them. Now let's look at I'll start from the bearish, then we'll come to the Mariposa, or what other people term as the twizzlers. Now over here with the bearish engulfing. No, let's start from the bullish. Yes, I love the bullish move. Let's start from the bullish engulfing. Then we'll come to the bearish. Then we'll do that of the Mariposa or the twizzlers. Now with the bullish engulfing, now this is what it means. As you can see here, you have a big candlestick with a big body. Then you have another small candlestick beside it, like a baby. Now that's what it means. So just as the name implies, engulfing. When this candle formed, as you already know, price open here, then selling up to this low, buyers coming in, then price close at this point. Then the formation of this candlestick beside it, this is where price open for the bull. Mainly price open, sellers came in trying to push the market down just as they did here. Then the buyers came in very strong. They said, no. We will allow you people to continue selling the market. So buyers came in and bought that currency pair. So they bought up to this high. So as you can see here, up to this high. So over here you can see some small wick here. Sellers were trying to show their, what we say in Ghana, catchy power. They want to show their power. But it wasn't enough. So if this, let's assume this happens to be 1 hour time frame candlestick, after an hour, the price goes here and this candle, that led to the formation of this candle. But let's look at something here. You will see that this candlestick form is bigger than this one. This one has engulfed into your back, your tree, Kasemo, and a Ghanaian language. We can't wait how many weeks. This candlestick is has overpowered this candle. So if you are in the market and you are trading as a trader, as a support, you see price trying to push down. But in the process, the next candle formed beside it has come in with a strong momentum of the buy move. How were you able to determine that there was a strong momentum at that point? Just because of the formation of this candlestick. The big body. It should tell you that buyers are strong. So if you are thinking of what? Sell that particular market. Hey, my brother, my sister, hey, my loved one, change your mindset. Look at this candlestick. Twice of this will give us this. The twice of this bearish candle will give us the bull candle 1. This used an hour to form. Look at this one. This same candle used an hour to form. Look at the move. Look at the move. Look at the body of that candlestick. It should tell you as a trader that buyers are strong. Don't continue to sell that market. You will lose. So that is the meaning. Bullish engulfing. And when these candlesticks are formed at key level, at support, it's a very good move. Adding other technical analysis, you are good to go. I'm not saying that maybe you say this if you buy the market. No, you add other technical analysis, you are good to go. So that is it. Now let's come to that of the bearish move. With the bearish move too, we normally see that at the resistance at the top. So with this one, price, we have to already know price open here, sellers trying to push market down, buyers coming, push market back to where it opened, then all the way to the top here, then sellers came in trying to sell the market, but the strength wasn't enough, and this is where price closed. Just after that, market open or price open for this candlestick. Immediately price open, what happened? Buyers came in strong, trying to buy this currency pair at this point. Then sellers said, no, we will allow you guys to continue to buy the currency pair as you did over here. So they came in strong, selling that particular currency pair. Then this is the body. They sold up to this point. This low. Then buyers said, no, we have to come in and buy this currency pair. They did what they can, but it wasn't enough. So look at the wick. So that wick you see here is the buy move that happened with regard to the formation of this candlestick. So the body of the mind, what I want you guys to take note of is the body of this candlestick. So when you see this candlestick form at key level, especially at the resistance, it should tell you something as a trader that there is a reversal. We'll look at the pattern for you to understand. I wanted to make refer you guys to something, but just keep in mind that we'll be looking at the pattern, so I don't want to push you guys back. Now, so that's what you tell you as a trader. If you are thinking of buying that particular market, stop. Look at the next candle fall. It should tell you that no, sellers are in strong at this very moment. So that is how it is. And this is what led to the formation of this candlestick that you see here. So this is what? Bearish engulfing. And the other candle I say, so we a trader who trade our market at the resistance. Make resistance. How many and I make one. This is our resistance. 85 reduce our resistance. 80 buy. And I will say another candle I'll form a big one. To say the whole why. If you tell it, price to me and to cost on your day and track that resistance and what's wrong and my head and because of the next candle now, I'll form one in China. We'll be diving more into that. So never mind. Price a year very candle now forming one in China. Ain't to me at the end just because sellers now marketing I'm not that. At the top phone now at the top phone or my head or my into new base of heading over tone and I'll buy that particular currency pair now. Now I give you. Now let's tell you the traders is also termed as traders or another word you say Marubuzu. So with this candlestick, I will explain to you what actually led to the formation of this candlestick. And it's very, very interesting whenever you see them on the chart. Very, very interesting. Let's quickly look at it. Over here is the bull candlestick. So with this candlestick, when it formed, look, price open here, leaving no wick. All the way to the top. Leaving no wick, their price moves. Let's look at what happened. Where price goes for this bullish candle, that's where price open for this bearish candle. The American said, a year candlestick can see one. I have heard my proposal and the deal soon a year to the snow. Price open our hand. The open the Jarwick be our. Said the carrick at the Marwick in the form to say we see. Price open and the sellers in the price in the Bible. And the buyers near the ever buy market no the price na back to a year opening price and some also. But how do we get so price open now boom e kakra how they do ha and about no say nja week bia ha say ya na e cruise you nja week bia ha you a year sell bia o Bija price equity here our bull candle we or no so na a year price AOP for this bearish candle. In the price OP so also you a year buy book BI then in the price OP and sellers no so then a pushy market down. Sellers no pushy market down. It's way of course on the big one that will see then and so a pushy market down. So if you are in the market and you are hello fellas, let's quickly look at that of the morning star and that of the evening star. We are now done with the Marabozu, the bullish engulfing, the bearish engulfing. Now let's quickly look at the morning star and that of the evening star. These two candlesticks very important when formed at key levels. So as a trader, you need to understand them so that as and when they are formed at a key level on the chart, you take appropriate decision and make money for yourself and that's all the people around you. Change your life with it. Now, with regard to the morning star, looking at what we have on our screen, this candle has a very tiny or small candle in between the bearish and that of the bullish candle. So, it terms as a morning star. Let's look at its formation. Over here, this is a bearish move. So let's assume sellers pushing market down. Then when they got to this level, after this big body, look at it, after this big body, expecting that market will continue in its sell move or momentum. But look at this candle, indecision. This candle with wick, small wick at both ends, a small body in between. So with this candle formed, should tell you as a trader, trading the financial market that the sell move or the sell bias that you are looking at this point, sellers seems to be zero in the market. So there is a possible reversal of the price move. So quickly, let's check the confirmation. The confirmation is this bullish candlestick that you see here. So the bearish move, price or sellers pushing market down. Then when it got to this point, look at it. Look at the candlestick. Look at, you compare this candlestick with that of this. It should tell you that the momentum for sell bias is down. So as a trader, to make prudent decision, you change your mind as you continue or as you decide to sell the market. Now let's confirm with the bull candle as you can see here. Big body tell you that buyers are strong in the market. So when this candlestick, the morning star, is formed at key level, at a trend line, as a support, as a trader who understands the language of the candlestick, you should know what to do. You will not continue selling the market, but rather you know what to do. Adding your technical analysis, you follow the Bible. So that is the morning star. So normally when formed at key level of support, very important. Very important to take note of. So let's quickly look at that of the evening star. The evening star is just the opposite. So the evening star, you normally see that move form at the top. But where you have the resistance. Thank you. So with this candle, let me explain the formation. As we have here, you can see a small bearish candle in the form of a star, indecision. Because over here, buyers pushing the market up, then at this price level, they couldn't. The power to continue buying the market or that currency pair was very low. And this is the evidence. This is the evidence that the buying momentum is very low. So over here, you see a small candle formed in this form. So with this candle, you tell you that there is a possible reversal because at this point, the buying power is very low. The buying power and that of the selling power seem to be equilibrium. And there is a possible reversal. And this is the evidence. This is the confirmation. Look at the next candle form. The what we call the bearish candle. Sellers pushing the market down. Look, no wick. Go up to this level. So when this candlestick formed at key level at a resistance at the top, you should think of a reversal. The buy bias is over. Now the sell bias is prominent. Over here, when it's formed at the bottom, the sell bias is over, the buy bias is prominent. Over here, when formed at key level at the top, the buy bias is over, the sell bias is prominent. These are the two things I want you to take note of. We need the one we do as a trader and person right there, ocean and tsunami. So we are forming a bottom. Market in a cellar, but from a good swat cellar, beautiful. Into me and to us, so can the way edge say a year at the tone follow or to me, most of the cost I told that currency pen and cocoa. Into you are for me, and I saw the cost I told that currency pen as a retail trader. I keep repeating retail trader because I've said earlier on that we retail traders will follow the big institution, their posters when they are trading. That's where we make our profit from, because that's $1,000 that you have in your broker, in your account. You cannot move the market with it. That $1 million that you have in your account, you cannot move the market with it, my brother, my sister. Just listen. That $2 million that you have in your account, you can't move the market with it. We have market makers. That is a big institution. And as they move, they leave footprints at key level. So as a trader, after when these candlesticks are forming, that is why I'm taking you through. I'm taking my time to take you through all these things. After when these candlesticks are forming, it should tell you something. That is why I said it's a language. As a trader, a retail trader, you should understand. After when these candles are formed, then you make the right decision. You make money for yourself and the people around you. Remember, you are with E-marketTubeFX and you are with your trader Henry Ampim. Keep watching this channel. Don't forget to subscribe, you like and share so that I continue to make content like this. You and your family will continue to enjoy. Together we equip ourselves with the needed knowledge we cash out from the Forex market. So these are the types of candlesticks that I want you guys to take note of. So today we've looked at the meaning of candlesticks. When you talk about candlesticks, what is it? To do that, the candlesticks, we traders use it for our technical analysis. Yes, we traders use the candlesticks for our technical analysis, and it shows the opening, the closing, the high and low price of an asset within a particular time frame. That is what we looked at. I also told you that when we talk about the candlesticks, we are saying that the candlesticks form on the chart as a language that we traders we understand as and when they are formed. We also learned that the candlestick happens to be what? It's like the Bible to us, we traders. Then this same candlestick that we are talking about, it represents the behavior of we traders on the market. What traders are we talking about? The big banks, the hedge funds, the retail traders. Our behavior, how we crave for a particular product, how we crave for a particular currency pair. And also remember, on that market, on the Forex market, as and when you are buying a particular currency pair, another trader is also selling. So that tug of war, that move that goes on the market is what leads to the formation of the candlestick that we are learning. So we should take note of. We are just reminding ourselves on what you've learned today. You've also come to realize that you having the knowledge of the candlestick will help you to make informed decisions as and when price moving on the chart. So over here too, I remember I took you guys through the various parts of the candlesticks. Candlestick here, share part bia, then the idea, the different no, ya shading na I don't say, a ya and a upper shadow, and a upper wick, a hay and a lower shadow, and a lower wick, a hay, I police candle, and a price open here, open a course, so and a price here, the close, but before the close, you can have for high, and a seller in the pushy and a video, a bit close you are. And we the real body of the candlestick. Wake no at each point wake also need the open meaning and shows a rejection when as and when they are formed on the chart. Yabaha issue if you want to say we any bearish candlestick. The color is not important. Some traders give different colors to their bull candles and that of their bearish candle. So you take note of. Over here is our bearish candle, and with this side happens to be the body of the candlestick. Then we learn that this side is the upper part of the upper shadow, this side is the lower shadow, and this side happens to be the opening price. I had a price here, they be here, then price close here. But before price close, it came very low. Buyers trying to push market up, but they weren't able to do that. Then price close at this point. So finally, today is what we've learned. Then we came to the types of the candles. We learned that when we talk about the types of the candlestick, we have the hammer, we have the inverted hammer, we have the dragonfly doji, then also we have the hanging man, we have the shooting star, gravestone doji, then we also have the spinning top, then we have doji, which both represent indecision in the market, which then lead to a reversal. Then we also came to look at Marabuzu, or what we also term as twizzers. Yes, I've explained in details to you guys. Then the engulfing, bullish engulfing candlestick, we talked about that one also. Then we also learned about the bearish engulfing candlestick. Then lastly, we looked at the morning star and that of the evening star. So guys, if you have knowledge about this thing that we've discussed today with regard to you identifying the candlesticks, then you will be able to tell what led to the formation of that candle as and when they are formed on the chart. It's a big achievement because it's going to help you to make informed decisions on the market. I already told you that we retail traders don't move the market. We have the market makers. So as and when they leave those footprints on the market, we the retail traders also follow their footprints, just like a baby or a child moving or going out to the mother. So you see the mother or parents ahead, and the baby will follow their footsteps where the mother will pass or the father will pass. That's where you see that young guy or that young boy following that of the mother or the father. That is how you trade on the forex market, because this big or the market makers, when they start injecting their capital, you, the retail trader, you can't move the market with that small amount of money that you have in the market. So as they move the market, you also follow them, then we cash out. Please, this thing that I've discussed with you, you should take note of. You should try as much as possible and watch this video over and over and over and over and over to help you deepen your understanding when it comes to this candlestick that we've looked at. You are making an answer. That candlestick here, I know what for what they said, video a pay Musaka Wufi. Ubako channel asayashe na kwa deepin ɛyɛ nimdie ɛfa ɛyɛ candlesticks no, because medi nkan akyerɛ mu akyerɛ sɛ candlesticks na ɛyɛ form no ɛyɛ kasa. Ebi o sɛ ɛyɛ traders no ɛyɛ bible, ebi o sɛ sɛnti na ɔno ma ɛyɛ traders no yesu ɛne yɛ ban a yɛda ne di a forex market wɔ no. Eti sɛ wode ho sɛ nɔma nyɛnsɛn na de gu wotiri mu a abiri bi a saa candlesticks yi ɛbɛfɔme out key level a chart no so no wonim sɛdeɛ wonim deɛ ɛsɛ woyɛ. Because footprint now a market makers no movie market no only there or chart no so no as in the form of candlesticks in a form no you also follow them and make money do it in our side then also when you and our cash out or market. So guys, that is how you're going to do it. Never give up if only you continue to believe that you can change your life with this forex. Never give up. Continue to watch this channel and also do my part to help you deepen your understanding when it comes to the forex market. So together we equip ourselves with the needed knowledge and skill to cash out from the financial market. Remember, this is E-marketTubeFX, and you are with your trader, Henry Ampem Dakun. I created this platform purposely to help my brothers and sisters worldwide, both in Africa and the other continents, to equip ourselves with the needed knowledge to trade the financial market. So you see, I'm doing this in a special way. The kind of explanation that I'm giving to you is special. All in the effort to help you to understand how this thing works, so that you make informed decisions as and when you trade on the market. So guys, continue to stay with me. In our next lesson, we are going to look at the candlestick pattern. So now we look at the meaning, then the types. We'll be looking at the candlestick pattern. So this candlestick, the types that we've discussed, when they form pattern at key level on the chart, what does it tell you as a trader? What decision are you supposed to make? We'll be looking at that when we are discussing the pattern. So continue to watch this channel, and those who have joined me on Google Meet, don't forget, we'll meet again